Will you have to pay federal estate taxes in the state of Washington? Interesting question. NASDAQ is partying like 1999. And then what about your reliability of income? That and so much more on this week's episode of Elevate Your Wealth.
And now, Elevate Your Wealth with Mark Stimpson and Casey Elkins.
Welcome into Elevate Your Wealth, powered by Elevated Financial Management right here in Seattle. And that's where you can find our hosts, Mark Stimpson and Casey Elkins. They got over 42 years combined experience in the retirement planning business, helping their clients get ready for, the big day and their golden years. They are financial fiduciaries certified. I'm Morgan Patrick. It's always a pleasure to jump on and talk retirement. Want to remind you, too, there's a website that is a resource. Check out efmnw.com. It's all letters, efmnw.com. Links to the TV show, our radio shows are in podcast form. Again, it's about helping you get ready for your retirement. And gentlemen, as we always do before we jump into our articles and the latest from retirement planning, how was the week?
It's been great. Yeah, the Mariners are doing good. Yeah, we won't talk about it too much. I don't want to. But they're doing good, so we'll take it. Right, that's nice.
The big dumper won the whole.
Yeah, I was going to say. I wanted to ask. And again, our studios are in different areas. I'm in a different part of the country, and I love jumping on in Seattle. But can you explain the nickname?
Well, it should be.
Are we allowed to?
Semi-self-explanatory. Yeah. He's gifted in the derriere area. How about that? Yeah. He's got a big butt.
I will just say this though. We go to the games. In fact, I was at the game on Saturday, and I don't notice it being that bad as they make it out on the radio. Let's just put it that way. I love looking at.
We got to watch those radio guys.
Mark didn't even watch the game.
I was going to say, you got to watch the radio guys because they have so much time to talk. They come up with some of the oddest subjects.
Yeah.
And I guess somebody's derriere and the size of is pretty odd.
Yeah. So like you mentioned, right, you're in a different part of the country, but here it's a big thing. Not only does it get talked about, but they've got a shirt that says Big Dumper with a dump truck on it. They've got like Big Dumper Night. I mean, it's like everybody calls them Big Dumper, right?
We were grabbing a beer before the game, and the person sitting right to our side, right on a really nice Mariner jersey, on the back was Big Dumper. So you have to laugh at that because it is funny, but it's
we talk about retirement and things that people can do to help themselves out. And what about a side gig? He could do a Porta-John company.
Exactly. We're number one in the number two business.
That's it, baby. Number one in the number two business. How about Mark? Way downtown.
Couldn't be happening for a nicer guy. He just really seemed
I've heard that.
Genuinely nice guy. Yeah. Mm-hmm. And did you see the video that was going around of him? As a little kid with a baseball bat, and he said, I won the home run derby. Like he's singing his little song, then he actually won. So it's like he's really out there living his dream, man.
Yeah. I mean, cool. I saw it. It went viral. Really, really cool when things come full circle.
Mm-hmm.
And to see a kid like that dream that big and make it. Yeah, really, really cool. All right,
he's a good person. That's the bottom line. He's a really good person. We love that about him for sure.
Yeah, so that's been exciting to see, and we're busy around the office, right, as always, which is nice. It's a little early to lift the blinders 100%, but for all of our regular listeners, you will be seeing more of us on a local station. We'll get into more details about that later on once everything's official there. So that's really exciting in TV. And then we did hire a new advisor, which we're really excited about. We'll probably have him on the show next week just to say hi and see how things are going. So we're really excited there. I think we've talked that we're adding some offices here, so we're taking over some additional space. And things are going really good. So we're really excited to be able to help people more and more. So it's nice.
I tell you, Elevate Your Wealth. We talk retirement each and every week. Elevated Financial Management growing. That's exciting. And more FaceTime. More FaceTime for the fellas. And it's always about the importance of just being ready for it. So, guys, one of the cool things I love about this show is you guys peruse whatever's coming out when it comes to retirement each and every week, and we end up talking about it. The first article that you sent to me is few clients will pay federal estate taxes, but states may take a cut. What kind of jumped out at you? We need to talk about this today.
Well, we know in the new One Big Beautiful Bill, the federal estate tax exemption is bumped up. Everybody was worried about it going the other way. It could have been reduced back to maybe 6 million or even $1 million, but that didn't happen. Right now, from a federal estate tax position, you're going to be able to pass $15 million per person. So a husband and wife, they'll be able to move $30 million to the next generation or wherever they want to move it with no federal estate taxes. But in the state of Washington, that's not the case. We're like one of 13 states. And the sad reality is, for those of us living in Washington, we're one of the highest when it comes to the state estate taxation. So and
that's a mouthful. Could you say that again?
Yeah, exactly. Anywhere from about 10 to 20% could be lost due to Washington state federal estate taxes. So again, we talk about the need for a plan, right, every week. And so tax planning has to be a big part of what we do if we want to be successful in retirement and keep the most amount of money that we've saved up and keep it in our own pocket. So again, we want to have a plan for this. So again, federal estate taxes for most of our clients are not going to be an issue now, at least for the next few years. The Washington state tax, now that's a different issue. So if you're listening, I hope that you think about this, because there are some things that you're going to be able to do, and maybe you want to touch on that, Casey.
Yeah. I'll just add a few things. Like you said, Mark. That doesn't affect the majority of the folks that we work with from a federal perspective, right? 15 million. We do have some clients above that number, but that's not the folks we work with all day, every day. But the reality is that the state estate tax, as Mark was mentioning, it's one of the exemptions for as far as the states go. Washington's is one of the lowest on this list, right, out of 13 states, and then the percentage is pretty high. It ranges from 10 to 20%, and so depending on how big the estate is and different details there. And so the point really being that should be part of your retirement plan. And sometimes people take the approach of, well, whatever I leave to my kids, it's like the cherry on top for them, right? So I'm not super concerned about that, and we understand the thinking there. We do, but at the same time, if you do leave, let's say, a $3 million estate to your children, and then there's a bunch of taxes that have to be paid on top of that, it cost you $3 million, and you might only be leaving them $2 million because $1 million of it's gone to estate taxes, right? Either estate tax or it could be money that was left in an IRA, so it's taxed there, or things like that. So if that's the case, if you're already taken care of, because the number one goal for a retirement plan is to make sure that you're taken care of, right, as a retiree. So after you're taken care of, how can we still be efficient with what is left behind? And that's really where this comes in, right? It's not step number one in a good retirement plan. It's step 4, 5, or 6, but still an important piece to the puzzle that you want to make sure that you've accounted for.
Yeah. Well, I just wanted to piggyback Casey super quick here, because what is something practical that we can do here? And I love what it brought out. Leverage life insurance trusts. Everybody wants to be negative on life insurance, but for us in the state of Washington, you might want to rethink that strategy. Life insurance trust can be a huge benefit. And then having gifting strategies and using them right now to be able to gift money. We know it's quite, I think, we're at 18, I think this year, right, Casey?
18,000.
Yeah, 18,000. Per child and grandchild. So there's a lot of gifting that we can do. So stay abreast, talk to somebody that can help you.
Well, it doesn't have to be brain surgery, right? I mean,
right, exactly.
Have a plan, sit down, talk about the estate, map it out well before you get there, and whatever you can legally do to help yourself in the tax category, you do it.
Right.
And work with professionals. We say that often, but really, people that do this on a daily basis, a weekly basis, this is their job. Your job is something else. You're working hard. You're very good at what you do, Work with professionals that really dial it in on estate planning, dial it in on retirement planning, and have your I's dotted and your T's crossed. That's the peace of mind we talk about. And here on the program, what we also like to do is give you an opportunity to get on the calendar with Elevated Financial Management. We have appointments. We have a limited number. This is a very busy office, but we've carved them out for you, and they are complimentary. Guys, walk us through what's going to happen.
Yeah, so if you're listening, please, all we want to do is have a conversation. If you've saved at least $250,000 or more, and maybe you're listening today and you're thinking about your tax situation a little bit, maybe you're middle of the road in that regard. You're worried about, how do I pass money to my kids? What about, is your income going to be guaranteed in retirement? And think about Medicare and the planning that needs to be done with that. We've got IRMA to have another possible tax that can put a little hitch in your get along, right? So again, please pick up the phone and give us a call. All we want to do is have a conversation. You're going to be able to leave your checkbook at home, but give us a call because we truly are here to help.
We're going to open up 10 appointments. We're doing that right now. These are complimentary. As Mark said, you leave the checkbook at home. There's no obligation, meaning just because you grab an appointment, you're not agreeing to become a client. They're not agreeing to take you as a client. This is a great way to test drive Elevated Financial Management. Complimentary appointment awaits. Call right now, 866-668-3625. That's 866-668-3625. 10 spots. They're going to go fast. 866-668-3625. When we return, we are going to get into this. The NASDAQ partying like it's 1999. Sounds like a Prince song. We'll talk about it next. Welcome back into Elevate Your Wealth. Your hosts, Mark Stimpson and Casey Elkins. You can find them right here in Seattle. Elevated Financial Management, 42 combined years of experience between these two in the retirement planning business, helping hundreds of those clients get ready for retirement. They're certified financial fiduciaries. I'm Morgan Patrick, and again, always a pleasure jumping on and talking retirement, the importance of having a plan. And here on the program, they peruse all of the retirement articles that are out there, the latest and the greatest, and we end up talking about it here on the program. But we give you an opportunity to take action on your own behalf. You've got questions about your own portfolio. You've got questions maybe about planning. Maybe you haven't started. Maybe you're just sitting on said portfolio. Or you're halfway down that retirement path, but you're a little frustrated. Maybe you want that second opinion. We make that opportunity possible. It is a complimentary appointment with Elevated Financial Management. Simply call 866-668-3625. We have 10 slots this week, and they are complimentary. 866-668-3625. All right, the latest that we have, the NASDAQ, partying like it's 1999, if I can say that correctly, and why that might that signal a stock market sell-off at some point. Guys, we have been on quite the run.
We have, yeah. It's the market's been on fire, right? And you know, it's created a lot of excitement, but I think, you know, the kind of the consistent message that we get from clients as we talk about this is that's all great, but I'm worried it's all going to fall out, right? The floor is going to drop, and we get that, right? And that's kind of the sentiment of the article too, is that is this leading into a potential sell-off? Now, I think something to consider here is that the last time that the NASDAQ 100 had this long of a run of positive closes day after day was in 1999, right? So we all know what happened after that. Now, that doesn't necessarily mean we're not saying that's what's going to happen, right? But it is interesting that after all of that euphoria in 1999, the market fell out, right? Now, it took some time. I think it took like a year after that long run of the NASDAQ doing so well for so long. It took about a year later, or it was about a year later that the bottom fell out. Now, again, does that mean that's what's going to happen? Not necessarily. It could not. But it does appear that the market is overvalued, and it's been overvalued for quite some time, right? And so is it going to continue? On top of that, you add the madness that is cryptocurrency. over the last couple months as well. And people are taking a lot more risk, I think, than number one, they realize. And number two, probably more than they should be, simply because things have been going up. So it feels comfortable to take the risk when you kind of place a bet, as it were, and it goes well. And so, okay, well, I'll buy some more, right? And that goes well. And so it kind of starts to pull you back in, right? And people can get used to that higher level of risk and become comfortable with it. But the question is it the right thing for your retirement, right? And I think that's what we can bring all this back to. We don't know what's going to happen, but are you making the right investment decisions for your retirement? Not necessarily just what you're comfortable with in the moment, because you might be comfortable with a high level of risk, but that doesn't necessarily mean that's appropriate for your retirement plan, right? You may not be comfortable with much risk at all, and that may not be appropriate for your retirement plan either, right? So there's two sides to that coin, and it's really about making the right decision to set yourself up for success, not necessarily buying at the bottom and selling at the very top.
Yeah. Well, you talk about this all the time, and when we hit it every single week, you don't want to get kind of lulled to sleep here, but we kind of have been. I mean, the market's just been on this incredible run, but we talk about it in every form about being diverse and having a plan. So if there is a rumble, if there is a correction, you're going to be more protected. We're not saying run for the hills and go totally conservative, but just be aware of what the current environment is, and you can go back to 1999, and we can learn from our history.
Yeah, and that's what I want to say, too. There is, I do want to bring, this article is really good, and they're running a comparison, but there was a big difference between 1999 and right now. In 1999, that run-up was over 50% run-up. This run-up that we were just talking about is closer to 23%. So it is about half of what it was in 99. Now, what does that mean? It's going to be different. We don't know. That's the thing. Casey and I, we don't try and time the market. It's about time in the market. And if you have a plan, that's going to help you to weather these storms, because you mentioned it more. If we have too much cash, and we saw a client last week, and they probably, I think it was over $500,000.
Yeah, like 1.5.
Sitting in cash, and that can be a problem, right, when it comes to inflation. So again, we've got to be balanced, and that's what's hard to do, because people's emotions can take over, and everybody thinks they got it figured out. And so right now there's been that recency bias of, you were just mentioning, Morgan, the train's been going up for like 17, 18 years. Nobody wants to get off now. They just think it's going to get to the top of Everest, and Everest is still, miles away. And so, again, this is where it can be dangerous. And if we have a plan, that's going to allow us to weather these storms. And if it does get a little choppy, which I think we both agree it's going to, it's not going to derail everyone's plans and create a total mess that they may not recover from. The problem is right now, and we have a Boeing client that we could tell the story. It was a disaster because he got so aggressive and put all of his money into a Boeing stock. And when the door blew off the plane, he lost 60% of what he built up over 44 years in a very short period of time. He's never going to recover from that now. Never. And so, again, we want to be very cognizant of this, and that's why we need a plan, right? Because it can be a disaster and totally derail your retirement plan if you're not prudent about what you're doing right now.
Yeah, that's true. And it's, it comes down to two things. It's timing and it's diversification, right? So, and I think, it's funny, diversification gets talked about a lot, but I think it's misunderstood very often, right? Just because you're in, let's say, 20 different stocks or 30 different stocks doesn't really mean that you're diversified. Maybe you are, but it's not necessarily, that doesn't necessarily mean that you are. Because if let's say you've got 20 stocks and all 20 of them are on the NASDAQ 100, a lot of those stocks move very similarly, right? So not one for one, but I'll tell you to maybe do a little research. When Apple goes down, very often Microsoft goes down. Those are big competitors, but at the end of the day, they commonly move together, right? And it's the same thing for a lot of other tech companies and a lot of the other bigger companies in the U.S. they are generally all affected to some extent based on what's going on in the economy and the world and things like that. So you may have a number of different holdings, but do they actually act different? Now, you might be thinking, well, I've got bonds, right? And that's my diversity piece. There is some truth to that, but when did you buy them, right? And how affected are they by interest rates? And so there's a lot of technicals that go into this, and there's details behind it. And then the other thing to think about is this. That high level of concentration, when maybe you got 20 stocks, but they all kind of move the same way, it's really like playing the lottery, right? Because at the end of the day, that's exactly what playing the lottery is. You are taking a bet, and maybe it's a small bet of $10 for a lotto ticket. I don't know what they cost. But let's say you go buy that lotto ticket. If you win, gosh, that really worked out for you, right?
Nice return.
Mm-hmm. Yeah, that's a great return, right? But how many people actually win? And that's the point, right? Is right now everybody's winning in the market because things are going so well. And so what do? You buy a little bit of stock, it does well. And so you go, okay, I'm going to buy some more, right? It's just like you play that lotto ticket and you win, you double your money. Okay, well, I'm going to put that money back in. I'm going to buy another lotto ticket, right? And eventually those odds turn. And that is where it's so key to make sure that how you are investing is appropriate to your time frame. If you're 20 years from retirement, awesome. Take the risk, put your foot on the gas. You've got time to recover if things do go the wrong way. If you're 5 years from retirement, that's really not the story, right? You've got to have other buckets of money that are going to be protected. They're going to make sure you're taken care of. And so this is your opportunity to do that. This is your opportunity to get a written financial plan put together by our team. We will sit down, we'll look at the risk that you're taking. We'll look at your overall investment mix. How diversified are you really? How do your assets perform in an up market, in a down market? What are the taxable consequences of buying and selling inside of your portfolio? Along with Social Security, when should you start Social Security? Are you going to have a pension? What should you do for Medicare? There's a lot of things that factor into this, so we will consider all of that with you. It's completely complimentary. It's no obligation. What you hear on the radio is exactly what you get when you come into the office. Don't hesitate. Pick up the phone and give us a call.
All right, this is the opportunity. We've got 10 appointments. They do fill up fast, but they are complimentary. You're leaving the checkbook at home. 866-668-3625. Just picture your portfolio and your retirement as a puzzle, and you've got the pieces, but you haven't put it together yet because everything's custom. You're going to get that. You're going to walk out with a written financial plan. 866-668-3625. Again, we have 10 spots, and those spots are going to go quickly. 866-668-3625. When we return on Elevate Your Wealth, we have more to discuss. And again, it's about income and reliable income. That's all next, right here on Elevate Your Wealth. Welcome back into Elevate Your Wealth, powered by Elevated Financial Management. Your hosts are Mark Stimpson and Casey Elkins. They have 42 years plus combined experience in the retirement planning business, helping their clients get ready for that big day and beyond. That is retirement, folks, and you need to plan for it. They're certified financial fiduciaries in Seattle. We talk retirement, and it's the importance of being ahead of this, having a plan, being proactive as opposed to reactive. There's going to be an opportunity to get on their calendar, and the appointments we open up during the radio show are complimentary. Now, to get into our top 10, all you've got to do is call this number, 866-668-3625. One more time, 866-668-3625. Again, a written financial plan. It's complimentary. No obligation means you're not agreeing to become a client. This is a great way to test drive Elevated Financial Management. All right, our next article, how's your client's reliability of income? And I think when we start talking retirement planning, we always kind of come back to ground zero, and that is income in retirement.
It is, yeah. It's ground zero. I mean, you couldn't have said it better. Everything that we do here, and we believe that every retirement planner should be doing, everything based on income. That is consistently the number one thing that people are worried about. In every poll that is done, they're worried about their income not outlasting them, essentially, right? They're worried about outliving their money. And so reliability of income, right? So there's ROI, return on investment, but we also refer to ROI as reliability of income. That's a really important piece to the puzzle. If you are basing your income on the market, S&P, NASDAQ, the Dow, whatever it is, and the market is moving up and down, is your income also moving up and down? Because I got news for you. My bills don't move up and down, right? They never go down. I know that much, right? And so the same thing, we want that with our income in retirement. Ultimately, the goal is to make sure that, I mean, think about it like this. If you could quit working tomorrow, but keep your same paycheck, you just didn't have to go to work to get it, who would say no to that, right? Everybody would take that deal. That's really what everybody's looking for when it comes down to retirement. And so that's what we're trying to accomplish when we create a retirement plan, is a consistent, reliable level of income that we cannot outlive, or that we're not going to outlive, right? And that's really what this boils down to. There's a lot more details in this article that we'll get into.
Yeah, and in fact, Casey mentioned it. I think something that we need to really think about is that old conventional information and modern portfolio theory. We see a lot of 60-40 split, right? 60% equity, 40% bonds. And then if you stick with a 4% drawdown rate, you should be fine. Well, there are many that study this stuff a lot more than even Casey and I do. Dr. Wade Pfau comes to mind, and he believes that 4% rule right now is way too high. He's struggling with even a 3% drawdown rate, and that your money will last. So again, do we have a plan? Because I think one of the interesting stats in this article brought out was that, and this is really sobering. I want the listeners to really think about what I'm about ready to say. The S&P 500 declines by at least 10% every 1.84 years. So basically, just shy of 2 years, you're going to lose 10% of your money. And if you're taking distributions, we call that sequence of return risk, at the same time that the market is going down, it can be devastating how many fewer years your money is going to last. Mm-hmm. And that's why we don't want to play around with this. This matters. And if you don't have somebody that's addressing that with you, I highly recommend that you give us a call, because it's one of the first things that we talk with clients about, and we teach it. It's a highlighted part of every course that we do in our college classes that we teach about this. So again, income, sequence of return risks need to be addressed. Otherwise, you can get yourself in a lot of trouble, even though you believe going into retirement you had a fail-safe plan. And how's that worked out for some of our clients?
Right. You know, that's it. And I appreciate you saying that, Mark, because everybody thinks it's not going to happen to me, right?
Yeah.
And this is a terrible illustration.
That's a very good point.
It is, right? And this is a terrible illustration to draw, but I just want to bring this out.
You're going to do it anyway.
I'm going to do it anyways, right? Because at the end of the day, right, you're going through your life and you know somebody else who has a family member that gets cancer, right? Yeah. Well, it's not going to happen to me. It's not going to happen to someone I'm close to, right? Mm-hmm. That's not how it's fine. It's like, it's this thing that you know exists, but it's like, well, but it doesn't really exist like in my world, right? Like that's not a thing for me, right? Mm-hmm. And that's the same thing here, right? Is that a cancer can come up at any point. Yep. It can happen to anybody. And there's nothing really that you can do to stop it, right? And it's the same thing that we're talking about here, right? Is there are a lot of people who retired at essentially the wrong time because they were invested in the wrong way, and they retired at 99, and then they were hit with a huge market downturn. Or they retired in 2000, they were hit with a huge market downturn. Or they retired in 2007, 2008, and they were hit with a huge market downturn. Yep. And that does happen. Those are real things, right? And you may think, well, it's not going to happen to me. And maybe you had a friend retire 5 years ago, and they're having the time of their life in retirement, right? Well, they've gotten through the first 5 years, so they're already headed down a good path. But if you retire and have a big negative return or a downturn in the market in the first 5 to 10 years of your retirement, that really can set you down the wrong path. Mm-hmm. And here's the issue. Let's say you're 66, let's say 67, okay, full retirement age for Social Security for a lot of folks. Let's say you're 67, you retire, you're 5 years into retirement, and there's a big market downturn. You lose, and I'm going to be nice, and let's say you lost 30% of your retirement portfolio. You're now 72. So you got a couple choices. You can live less life in retirement, which means you can take less income out of your portfolio, or you can go back to work. Right. Which of those two things do you really want to do? Neither, right? Those are both terrible options. Those are not options that you want, but those are the only options that you have. And so then the question becomes, what can you do to protect yourself from that type of issue in retirement? And that is what we're talking about with this article, is how it really impacts your life.
Yeah, I just want to add, I appreciate Walmart very much because they will hire seniors. So many companies, once we get to our mid-60s, right? Nobody wants to hire them, right? Even though they could be highly qualified. Why are so many working there? We know the answer to that. Now, bad things do happen. We all know that too. But a lot of them are dealing with the pain of regret, right? They're working just to pay their bills. And because they didn't deal with the pain of discipline and save money for retirement. And now they're having to work. And many of them are going to work until they pass away, right? Because they simply don't have any income that except for possibly just Social Security. And some of those can be low Social Security amounts that they have to work just to pay basic expenses.
Make the ends meet, yeah.
Yeah, and that's we hate to see that. We don't want any of our clients to go through this and have to learn from the school of hard knocks, but it happens. And Casey hit the nail on there. We never think it's going to happen to us, right? And yet this is exactly what does happen. And you better have a plan because the reality is going to hurt bad. And the reality is, too, that it didn't have to go down this way, right? But we think we got all the answers sometimes, and we don't. So please, if you're listening, just think about giving us a call and let us help you, give you some ideas. Not going to tell you what to do, but we can help if you'll just let us.
Yeah, we talk about it pretty often on this show. It's about advising. It's about talking about your overall retirement picture. But in the end, you're going to be the decision maker. You'll be given options, talk about how you're going to be doing your planning process. But in the end, you're going to make those decisions, and it's going to be on you with help from professionals. This article is eye-opening, redefining ROI for retirement. I love this part of it, guys. We'll hit this real quick, and then we're going to open up those appointments. But you're shifting from accumulation, which we do our entire lives. We save, we put our money away, and then you move into decumulation, and the ROI changes from return on investment when we're trying to raise the money to ROI, meaning reliability of income. So again, you get to a point where you are nearing retirement. You have to make that shift.
Yeah, and one of the things I loved about this article is that if we get in a panic mode because the market is not behaving like we want it to, right? Our investments are going down. Are we going to make a knee-jerk reaction because our emotions are involved? We know that happens, right? It happened in 2000. It happened in 2008. And it's going to happen the next time this correction happens, which we're long overdue for. But it can derail a wonderful plan because you don't have income. I love this income segments to draw from, especially liquidity when you need it, or maybe a second guaranteed source of income separate from Social Security. Some of our clients are fortunate enough they have a pension. Some do not. You might have to create your own. So again, it is always going to come back to income.
It is. And what you mentioned, Mark, is that emotional impact that it has, and then an overcorrection essentially, right? Yep. If the market starts to fall, you get freaked out and you sell. And you might be thinking, well, no, I won't do that. But we see people do it all the time. It happens all the time. And then that continues to push the market down because of all the sellers. And it just makes me think of this. I read an article recently that the NHTSA, National Highway Traffic and Safety Association, said that single vehicle runoff road crashes, overcorrection was involved in 30 to 40% of those accidents, right?
Exactly.
And that's a real statistic. And the same thing applies to market investments. If you are not set up the right way in the first place, the chances of you overcorrecting and making a mistake grow, and it's something that a financial plan will help to solve.
Yeah, and I just think, I love that Casey just said about a plan, because we keep it simple in our office: a red bucket, a green bucket, and a yellow bucket. And people might think that that sounds a little corny, but again, we believe in simplicity. It really is. If we have liquid money in the yellow bucket, we have income in the green bucket, and the red bucket is going to help us with long-term growth. It's going to help us to be successful.
It's important. It's very important. Guys, we have a limited number of spots. We've got 10 of them. Let's tell everybody what's going to happen if they call our number.
Yeah, we've talked about this article, and if you've been listening you've got issues about your income needs, you're concerned about maybe sequence and what's going on in the market right now. Taxes are a big piece that a lot of firms don't talk about. We do here. We're going to help you with Medicare and Medicaid planning. So please pick up the phone. Let's just have a conversation. We're here to help.
10 appointments. They will go fast. Call this number, 866-668-3625. This is complimentary. You're leaving the checkbook at home. There's no obligation. You're not agreeing to become a client. This is a great way to test drive Elevated Financial Management. Grab one of our 10 appointments. They're complimentary. 866-668-3625. That's 866-668-3625. It's time for scenarios. They happen all over the country. We bring them together, throw them at the guys, see what they come up with. That's next. Back. Elevate Your Wealth, you're tuned to it, powered by Elevated Financial Management right here in Seattle, hosted by Mark Stimpson and Casey Elkins, and that's exactly where you can find them, Elevated Financial Management. Check out the website, efmnw.com. It's all letters. It's a great resource, efmnw.com. Links to the TV show, our radio shows are in podcast form. Just good information on retirement and contact information if you got any questions about where you are with your planning. All right, so 42 combined years experience between these two, and it is all about getting you ready. Certified Financial Fiduciaries, and I'm Morgan Patrick, and it's my pleasure jumping on and talking retirement. And now we're at our scenarios, and these happen all over the country, guys. We've gathered a few. We're going to see how you would handle them. I want to remind our listeners that you've got your very own scenario. Make sure you have a customized plan. So take these with a grain of salt, and when we open up the appointments, grab one. They're complimentary. There's no obligation. You can come in to Elevated Financial Management and talk about your scenario. And if you want to proceed, certainly that is an option. All right, we have our scenario number one to Casey. You can start off with this one. They've heard from their adult kids that crypto is the future. And they're wondering if putting 1 or say 2% of their portfolio into say Bitcoin or Ethereum is reckless or reasonable. They're 67 and mostly invested in mutual funds and dividend stocks. Is there ever a place for crypto in a retirement portfolio? And if so, how small should that slice be?
Well, that's a really interesting question. And you know what? One that we actually get quite a bit. Crypto is definitely being talked about more now than ever. And not just because of recent growth in the crypto world. Even, a year or 2 years ago, the conversation surrounding crypto is more and more. And there's a lot of people that are still completely uncomfortable with the idea. Sometimes what we get a lot is, well, how do I prove that I own this thing, right? Like how has that come about, right? Yeah. And it's like I own it in this like digital wallet, right?
It's in the cloud.
It's in the cloud, right? Things like that, right? And maybe to put that into perspective, think about it like this: how do you prove that you own the Apple stock that you own, for example, right? Well, you pull up your statement from Schwab, let's say Charles Schwab, and you can see it on the statement. But you don't have the physical stock certificate, right? Nobody does, right? That's not a thing anymore, right? You go into your quote unquote digital wallet at Charles Schwab, which means you log into your account and you prove that it's there. And so crypto is getting more and more understanding and thus gaining more and more traction. So does it have a place in a retirement portfolio? A lot of that really depends on your individual risk appetite. I would say for most people, probably not, right? Not part of your retirement portfolio. Now, that doesn't mean that it can't be part of your household assets, but it's probably not money that's going to produce income for you in retirement, right? Now, it could be something, maybe you have a smaller pocket and you've invested a small fraction, very small percentage of your investments in crypto. And that is money that you're okay losing, that you're okay seeing cut in half by extreme volatility, because we've seen massive growth in the crypto world. Ethereum, XRP, I think they're both up like over 50% in the last month or something like that, right? And so those are big numbers, right? But that also means that there's a lot of downside volatility too. So it could be part of your overall assets, but we would not, at least at this stage, recommend making it part of your retirement portfolio. And I just want to stress that those are different things, right? And if you do include it in your overall investments, again, that is going to be the most aggressive money that you have. Now, I'll caveat it with the idea that I have crypto, and so does Mark, right? So we're not crypto naysayers, but those are not our primary investments, and they do not make up the majority of a retirement plan.
And I want to add, we don't recommend crypto to our clients.
No.
I want to be sure that we've made that very, very clear. Do we believe that crypto can have a place? Oh, I would absolutely say yes. But again, when it comes to retirement planning, I don't want to risk my clients' futures, on something as volatile as that is, or right
Very
now.
speculative.
Yes,
yeah.
It is speculative. And if a person wants to and realizes that, I would just say this, Casey mentioned it, if you're going to go in the crypto and play in that world a little bit, or that sandbox, you better be willing to lose what you put in there. And for some clients, that's just not something they're ever going to do. So we're not recommending it. I want to be sure that that's very clear. But could you hit a home run with it? Absolutely. We have a client that's made a small fortune in Bitcoin, right? But we still don't recommend that for clients planning for the retirement income. It's just too risky, and we don't believe that that's a solid plan or a solid thing to recommend to somebody.
Yeah, so, and I do think crypto is going to play a bigger role as time goes on. I think 5 years from now, everybody's probably going to have crypto in their portfolio, and not necessarily in the same way that you're thinking of right now, because there is a version of this where stocks, assets in the stock market are somehow staked to the crypto world or traded on blockchain technology, things like that. So crypto could become a bigger part, just in the sense of how things are custodianed or held as part of the future.
My follow-up was going to be, at a glance, your client base, when they come in and talk, are more and more people wanting to know more about crypto,
definitely,
Bitcoin, Ethereum?
Yeah, definitely. And we do get a lot of questions, just kind of like, what is it? How does it work? Is that something that you guys do? Which, like Mark said, officially, it is not something that we do. It is not a security, right? Cryptocurrency is not considered a security as far as the SEC is concerned. And so we don't advise on that. We will talk about it and we'll educate as to what it is. But ultimately, if you want to invest in something like that, you got to do your own research and figure out what works for you. But it is something that is brought up quite a bit. And there is a lot of opportunity for growth there. There's a lot of opportunity to the upside. There's a lot of opportunity to the downside too, right? So you really got to understand both sides of that to make sure that it's the right thing for you.
Well, it's like we always say when it comes to retirement planning, it starts with a conversation. You're going to have ideas about what you want in your plan and work with professionals, and you map it out. All right, we are in the middle of scenarios. I want to remind our listeners that we get on here and we talk the talk, but we also walk the walk, meaning we give you an opportunity, an outlet to get your questions answered in person. It is a complimentary appointment, and there's no obligation if you grab one of these to become a client. So call 866-668-3625. That's 866-668-3625, and we'll line you up for one of our 10 appointments we've carved out for our radio listeners. All right, next scenario. Mark, we'll start with you. They have adult kids from previous marriages and recently updated their will, but they're unsure how to handle their IRA beneficiaries. One wants to leave everything equally, but the other is concerned about potential conflict later. What steps can someone take to keep their estate plan fair and avoid future family drama? And we all have heard stories about family drama.
Yeah, it's actually happened in my own family, so I get this. It's interesting that this person is concerned if they divide everything equally, right, that there could be a future problem. Well, one of the things that I've learned in my career is that some children have higher paying jobs than others do, right? We all know that. Higher tax brackets. And if we leave assets equally to each one of our children, the higher wage earner is definitely going to end up keeping less, right? Because his taxable portion is going to be higher than possibly his siblings. So some tax planning in this regard can be done with certain different types of assets. One of the things that I highly recommend, they've updated their will. That is great. If you want to avoid the probate process, you might want to consider looking into what we call a revocable or a living trust, because that will eliminate the probate process. Now in Washington, depending on your asset size, that can vary. A simple will can work fine. You can also set your accounts up at the banks to be what we call POD or TOD. What does that mean? POD is paid on death. TOD is transfer on death. That's just like setting up and having beneficiary designation. The bank will transfer those assets upon your passing, and there will be no probate if that's done at the bank level. Some people have never done that. I highly recommend that you consider doing that. We can do the same thing with real estate. We can go in and make sure that that can be passed on in the right way with no probate. So there's different planning tools that you want to be familiar with that can make it easier, and it can keep family drama down, because if you don't do this the right way, it can cause some heartache, and feelings are going to get hurt. And once money gets involved and you haven't taken care of business, there is going to be some siblings possibly that don't talk to each other because of this. And so we want to be very, very careful about that.
Yeah, it's sad because it really, it's something that could be avoided, right? It doesn't have to happen with a little bit of planning. And again, that is part of a holistic, complete retirement plan, right? Is number one, you make sure that you're taken care of. And then, we look at income and Social Security and taxes and all those things. And then the final step is, how do we make sure that when something does happen to you, that everything passes as it's supposed to, and that these things have been considered, and that there is a plan for that. And so that's why we regularly offer a written financial plan, which is the same thing that we're offering today. So I'll just maybe say it this way, a little bit different than how we normally would. If you've been listening to the show for some time, you know exactly probably what we're about to say, that we do a written financial plan. This is no obligation, completely complimentary. We'll talk about taxes, income, long-term care, all those things. If you've been listening for some time, obviously something keeps bringing you back to the show. Take the time, give us a call, even if it's just to set up a conversation with Mark or myself over the phone, just to see what we might be able to do for you. Exactly what you hear on the show is exactly what you get when you come into the office. And I'll be clear about what this is not. This is not us agreeing to take you as a client. This is not you agreeing to become a client. This is your opportunity to test drive, and the same for us, to see and make sure that we could have a good working relationship, see if there is something that we can do to help. We can't help everybody, but we do our best to try. So this is your opportunity. Don't hesitate. Give us a shout now.
We got 10 appointments. Call 866-668-3625. You heard Casey say, too, this can also be a phone call. It's easy. It's peasy. Do it now. 866-668-3625. A complimentary appointment awaits, and you're not agreeing to become a client if you can grab one of these. So call now. 866-668-3625. We are here to help. Another edition of Elevate Your Wealth, powered by Elevated Financial Management, in the books. For Mark Stimpson and Casey Elkins, I'm Morgan Patrick. We'll see you on the radio next week.
Investment advisory services offered through Foundations Investment Advisors, LLC, an SEC-registered investment advisor. The content provided is intended for informational and educational purposes only. The views, statements, and opinions expressed herein are those of the individual speakers and not necessarily those of Foundations and its affiliates. The information contained herein does not constitute an offer to sell any securities or represent an express or implied opinion or endorsement of any specific opportunity, offering, or issuer. Any discussion of performance or returns is not indicative of future results. Each individual investor situation is different, and any ideas provided may not be appropriate for your particular circumstances. Foundations only transacts business in states where it is properly registered or excluded or exempted from registration requirements. Registered Registration as an investment advisor is not an endorsement of the firm by securities regulators and does not mean the advisor has achieved a specific level of skill or ability. No legal or tax advice is provided. Always consult with a tax professional. All rights reserved.